What's going on, guys? Welcome back to another video here. So in this one, we're going to be going over some tips and tricks on how to trade SPY like a professional. Now, in this video here, we're going to be using SPY as an example, the SP 500 ETF, but I know a lot of you guys like to trade some other stocks too. The concepts and the tips that we're going to go over in this video here are applicable to anything. But again, SPY is very liquid in terms of the options chain that is going to have every single day, week, and month. So it provides a little bit of less risk when you're entering and exiting some of these trades. Now, there's a couple of things that we need to go over, some tips and tricks, but let's get right into it here. And again, guys, if you do enjoy the information and analysis that I provide for you guys in these types of videos, make sure you go down and hit that like button. It costs you nothing to do it, but it really helps us out a whole lot in getting this information out to as many people who want to learn. And if you guys do want to see more videos like this, make sure you hit that subscribe button and turn on that notification bell so you're notified every time I post a new video. Now, the first thing that we need to go over on how to trade SPY like a professional is kind of two things in one. The first is really going to be risk management here. Now, you might be a person that is very risk on and you like taking a lot of risks in the market here. But for most of you guys, when you are looking to enter into any trades, going for expiration dates that expire that day or the next day is going to come with a lot of risk. With a lot of risk comes for a high potential of reward as well. But again, you have to balance those things and think to yourself, well, how can this trade completely go against me? Really successful traders don't necessarily focus on how much they can make from a trade, but how much they could potentially lose. So again, getting yourself more time allows you a little bit more wiggle room, and it allows you to capture the bulk of the move as well. The second thing is I want you guys to think of trading as almost like going into battle every single day. You're not going to go into a fight or into a battle unprepared. So let's pull up the chart here and see what kind of preparation that we actually need to do on a day-to-day basis to set ourselves up for success. So if you look at this chart right here, this is the Webull chart that I use all of the time. And you guys see me flip back and forth all the time between the trading view chart and the Webull chart. And the reason why I use the Webull chart as well is I don't want to cloud my charts up too much with too many different levels, too many things on the charts to give myself analysis paralysis. But again, you guys all have these levels drawn out for you on the charts that we provide you guys in any given stock. Now, looking at this right here, you can see that these lines are and these support and resistance levels are color coded a little bit. So anything that you guys see in green on my charts here is from a longer time frame, the daily, the 4-hour, sometimes even the 1-hour time frame. But what this allows me to see on my chart is if we are approaching one of these levels, I know that it's from a longer time frame and can have more weight, meaning that price is more likely to bounce off one of these support levels or reject off of one of these resistance levels. Now, the lines that I have here in orange are more recent price levels, so we're going to be looking at those from the 5-minute time frame over the last couple of days. Now, what this allows you to do is you are able to paint a better picture of price action and human emotion on the chart. If everybody is looking at these key specific levels, you want to know exactly where those levels are, where these big buy orders or sell orders could end up starting to come in. Now, there's a couple of other things that we need to talk about going off of this. Now, this is how we really start to take things to the next level. Now, some of this is going to be managing your emotions, but there's a really solid example that I was going over with a lot of you guys from this week about really honing in on your entries and confirming directions and trading with proper risk management. So what we're looking at here is price action on September 26th. And you can see that out of the gate, the market was ripping all the way up right around to this key resistance level we have from one of these previous days here. Now, if we're looking at what happens next, you see the SPY fall about $4 before we end up getting this 1348 cross right here to the downside. Now, again, going off of the first thing that we were talking about here, if you had more time on this contract, well, you wouldn't have gotten stopped out by this move and you would have been able to ride this thing all the way down to this next key level of support. But there's something else that we can do to really get so much better entries in the market here. So You guys hear us talk a lot about what I like to call the rim strategy. You can think about this like a basketball hoop going in, and you just bounce it off of the rim, and the basketball doesn't actually go in. That's essentially what we see with price action a lot of the time when it's establishing trends. And I like to use the 13 EMA, the exponential moving average, the 13 period exponential moving average on the 5-minute time frame in order to enter a lot of these trades. Now, what I like to call this here is a retest. You've seen the market fall about 4 points, $4 from the heights, and now you are getting this indication that we are most likely going to continue this move down. And you're on this candle right here. Now, if you're risking, or you're seeing, okay, price, if it starts to get above this 13 EMA here, which is the line in blue, it can start to rally back up towards these highs. Well, why wouldn't you just wait for a retest, enter right around here, and keep your risk super small? Now, if you look at how this trade would have actually played out on this day, if you entered in on this rim right here at around 366.82 and you see price fall all the way down to 365.35, that is an unbelievable scalp right there. You're making 5, 10, 15% on this trade, and you are completely out. Now, you see it come up, retest again, and then it starts to make that move back to the downside. Now, some of you guys might be doing this already, which I think is a really, really awesome thing to do, and it's waiting for these retests. Now, to take this a little bit further and make sure that you guys fully understand exactly why we would do this, well, let's say right here, again, like we were just talking about, that the risk is up here. Well, the price is at 366, essentially right here on this candle when you are getting this cross down. It is very, very, very likely that we are going to see a retest at some point after this aggressive move to the downside. Now, you see this move back up here, and you have to ask yourself, is this move likely to reverse right here and come back up? Or is it more likely that the move is going to come back down? Well, again, this is not going to be a 100% certain every single time price comes back up to this 13, it rejects back down. But entering right around these key points right here and showing you that the trend is coming down, if you were to see price reverse back up here, well, you're able to get out of the trade with a much more minimal loss, and you have a better idea of where price is most likely going to go, just according to all of the probabilistic measures out there in the market at any given time. Now, to kind of wrap all of this up in a nice little bow, the first thing that we really need to harp on is there's no reason to be trading contracts that expire that day. If you want to have some fun and size completely down on a position and play with house money, yeah, that's perfectly fine. But you are taking on a significant amount of risk. The second thing is, again, you are going to have to do a little bit of preparation going into the market. There are people out there with much more analytical capability than we as retail investors have. So making sure that we are giving ourselves the best possible chance of success in knowing where these key levels are in the market are incredibly powerful. We can do another video on levels as well. If you guys want that, make sure you guys comment that down below. And again, retests. Retests are incredibly important, because if you start to chase these moves down here, yes, you can hit some of these moves every once in a while where price starts to move and you can chase it to the downside or the upside and make a bunch of money. But thinking about risk to reward and the probability of those trades working out on a longer time frame, you are going to have a lot more success over the long run playing these retests and confirming the direction that price wants to go. So guys, that is going to wrap up this video here. If you did enjoy the information and analysis that I provided for you guys here, make sure you go down and hit that like button. It costs you nothing to do it, but it really helps us out a whole lot in getting this information out to as many people who want to learn. And if you guys do want to see more videos like this, make sure you hit that subscribe button and turn on that notification bell so you're notified every time I post a new video. So I hope you guys are having a great weekend. I'll see you guys in the next one. Peace.